Hey, good afternoon, everybody. Good morning, wherever you are. Welcome to a new week of Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrading.com. And if you are not familiar with our show, what we do here is we talk earnings on stocks, and I highlight stocks that are going to have quiet earnings, meaning moving single digits, and stocks that are going to break out and possibly move double digits each and every week. And I try to highlight the quietest of quiet and the biggest of movers, but also we have some big names that just move, middle single digits, that sort of thing. But you probably want to know who those are. And we're going to get into those here in just a moment. So don't forget, we have our trades that I'll give out later in the show, and we'll actually cover last week's trade on Decker's Outdoor, which was a very nice winner. All this and more coming right up. Let's get it going. All right, everybody, this is a big week for earnings. We have over 590 stocks, actually 591 stock companies declaring just this week. All right, and so you can see my sheet up here on our quiet candidates on the right, our breakout candidates on the left. And again, I focus on options. All right. We are looking at options and paying attention to how the options market is pricing these stocks for possible breakouts or consolidation. This is important because we use different option strategies around each. For the breakout candidates, we use straddles and strangles. For the quiet candidates, we use things like iron condors, butterflies from time to time. All right. So that is the difference, and it makes a difference when you're trying to decide how to trade a stock around earnings. So let's get right to it. We have, as you can see, our run sheet here, and we've got lots of big names, but there's even some bigger names that aren't on my sheet because they're moving marginally this week, is how the market makers are pricing this. So let's start on the right-hand side of the ledger here. Let's go over the quiet stocks first, all right? So let me give you an example of what a quiet stock looks like. This is Yum Brands, which, by the way, has earnings this week, and you're going to see them in just a moment. But this is a historical chart of Yum Brands, and you can see the trading range for Yum Brands over a year, well over a year of trading, the last 4 earnings cycles. And this is an example of a quiet stock where through the actual earnings, this stock moves about 4%. That is a quiet stock. So let's take a look at that list here for quiet stocks. We begin the day with Clorox, okay? And you can see the list here, but I'm going to run down to them. I'm going to show them on the charts and pick out a few to talk about. So let's begin with Clorox. So we're taking a look at my chart here. So Clorox, interesting. The market has been down all morning. So it's interesting to see these stocks. In fact, the Spider Index Trust, or the S&P 500, is down 0.8% as we speak. So it's interesting to see what stocks are actually trading higher today. Okay, those would be inversely correlated or not very correlated to the market at all. And those are always interesting. And Clorox happens to be one of those. Clorox declares today after market close, and it has an average move or an expected move less than 7%. So when you're trading options and you trying to decide on your strategy, if you can't get a straddle or strangle that is going to profit at under 7%, maybe say your profit is 5% out of the money, then that's not a good trade for you. If you're looking at an iron condor and your break evens are within 6%, but the stock moves about 7%, that's not a good trade for you. But if you can, for $150, $160 stock, we can often find a pretty good trade. So that is on our quiet candidates for Clorox. Moving on, we have Juniper Networks. Now, interestingly enough, Juniper actually moves sometimes not around earnings, okay? But during earnings, and that's what we're focused on. This stock, believe it or not, moves less than 2% through earnings. And that is what the estimated move is again this week. Juniper is trading, as you can see here, down at around $35, $34.91 current trade. The stock will gap around and jump around, but that's not earnings typically. during earnings and through earnings. Believe it or not, they're priced at less than 2%. Okay, next on our list is Pfizer. This is another quiet stock. Again, all these right now are quiet stocks. All right. So right now, Pfizer will have earnings tomorrow on Tuesday before market open. This is a quiet stock. It's a $26 stock. So maybe a butterfly or a condor or iron condor on something like this. If you can get those break evens at 6-7% away from the money, then this is a good strategy when the stock is estimated to move less than 4%. Okay, continuing on here, we have Electronic Arts, which used to be a big mover, but believe it or not, look at that big gap they had dropped there on news, not on earnings, on news. Electronic Arts will have earnings on Tuesday, February 4th, after market close, and the estimated move here is less than 4%. Okay, so a quiet move actually through the earnings event. We could see here that the little gap up that it had off the bottom here, you can see the consolidation down here and then the gap up. We could see a move right in this area here for Electronic Arts. Another quiet stock on a stock company that jumps around a lot is Toyota Motor. All right, so TM is the symbol here. They will have earnings on Wednesday, February 5th, before market open. Okay, the estimated move here is less than 6%. And you can see here the stock, this was not earnings back here. Okay, this was not earnings. Earnings was back here. And you can see here the stock gapped up a little bit, but the stock move was less than, excuse me, I zoomed in a little too much there. The stock moved ultimately less than 1% through the earnings announcement, even though this thing gaps around. Look at this chart here, all the gapping around and jumping around, but through the actual earnings announcement, the estimated move now is less than 6% for Toyota Motors, even though it has gapped down today and is down 2.4% today. I mentioned it earlier, and here it is, Yum Brands, and here is that chart that I showed you with all the past earnings cycles for Yum Brands. That's the example of the quiet stock. We'll look at this. Yum Brands will have earnings on Wednesday, February 5th. The estimated move here is less than 5%. That's what the market makers are pricing in here. An estimated move around 5%. So again, if you can find value, okay, that where you can maybe sell an iron condor, that where your break evens are around 7-8%, it's a pretty good odds of success there. Or conversely, there happens to be a straddle or strangle that you can do where your break evens are less than 5% away, then that might be an option for you. But right now, that's on my quiet list. We usually sell premium. Why do we sell premium? Well, because implied volatility in these options rush higher on every stock right before earnings. Okay, it's just a kind of a historical pattern. Every stock implied volatility rushes up, and then after the announcement, it collapses. And that is where we profit on these iron condors or butterflies, is on that drop of implied volatility. All right. So next on our list is ConocoPhillips. All right. ConocoPhillips will have earnings on Thursday, February 6th. The estimated move here is less than 4%. You can see here that ConocoPhillips has really been kind of under pressure here lately. It was in a trading range for a long time, broke through the bottom of that, and now is establishing a new pattern. We'll see how it goes. Interesting candle developing today. That looks like we might get a rally higher from here. But through earnings, we're looking at less than a 4% move on earnings. All right. So closing out the week on the quiet ledger, okay, quiet stocks, is the Chicago Board of Options Exchange. All right, the SIBO. Okay, this is a $200 stock, and look at that. The stock is up 2.25% today when the market is struggling a little bit. The SIBO will have earnings on Friday, February 7th, before market open. The estimated move here is less than 4%. And on a $200 stock, we can often find good candidates when we sell premium into the earnings event. So all this week, so today, tomorrow, Wednesday, implied volatility will be rushing into the options. and Friday after the announcement, that implied volatility will crush, will leave the options, and there's a good probability of a profitable trade if you can find an iron condor where the break evens are, say, 6, 7, 8% out of the money on that. Okay, so moving on, then let's take a look at the breakout candidates. Okay, let me show you an example of those breakout candidates. And when we look at this, I like showing Shopify here. Shopify is one of our just consistent performers, and this thing is a mover. Okay, now Shopify doesn't declare this week. This is just an example, a historical example of what we look for these breakout candidates. And this is where the excitement is. Okay, we get big winners out of these. The iron condors are just small, consistent singles. With these, we can get singles, we can get doubles, we can get triples, and sometimes we get home runs out of these trades. All right. So, beginning with, we're going to begin this week looking at Palantir. Palantir has a estimated move. Listen to this: greater than 18%. Okay, that's where the market makers are pricing in right now. Greater than 18% on Palantir. Last I checked, implied volatility was around 15, 16% on this. Excuse me, not implied volatility, but the option pricing for a straddle or strangle was around 15, 16%. So there is an edge there. The stock usually moves around 18%, and that is the recipe for a winner if it does what it historically does. All right, so Palantir has earnings today, February 3rd, after market close, estimated move greater than 18%. And then we have Rambus right here. RMBS is the symbol. They have earnings also today, Monday, February 3rd, after market close. The estimated move here is greater than 12%. Okay, double-digit move anticipation for Rambus, and you can see the stock does tend to gap around occasionally. All right, and move. So we expect that again today. Now, there is an interesting thing about Rambus that I'll talk about in a little while. I'll come back to Rambus in a little while, and I'll show you what's interesting about it. Okay, next on our list here is Advanced Micro Devices. Okay, they have an estimated move greater than 10%. AMD has earnings on Tuesday, February 4th, after market close. All right, the stock is down about 1.5% today, but we expect the stock to move even bigger depending on news, outlooks, revenue beats, etc., or revenue misses. We expect bigger moves greater than 10% on AMD. Disney is always a good performer, believe it or not. They have an estimated move right now greater than 10% on Disney. Okay, all sorts of things can matter with Disney. Okay, the cost of producing movies. Okay, the consumer, that discretionary spending, all those things. So Disney is often not only produces some exciting movies, but is an exciting stock to watch around earnings as we head into the next earnings cycle for it. So Wednesday, February 5th, before market open, Disney will declare. Okay, continuing to move on through our list, Uber right now will announce on Wednesday, February 5th, before market open. Uber is usually a big mover as well. Double digits are what we are expecting, over 10% for Uber. And this is usually a pretty consistent one. Now, again, for these types of candidates that I've been talking about, from Palantir on through here, through Uber, we look for trading straddles and strangles for these. Okay, straddles and strangles for these. If I can get, say, a straddle or a strangle that my break evens are, say, 6-7%, then this is a great candidate because it usually moves around 10%, and that is what we're looking for our delta neutral breakout portfolio. All right, so we'll keep an eye on that. Moving on, we have Affirm. All right, Affirm is notably a good mover. See, they have a estimated move greater than 13%. Let's bring on their last earnings. They had an estimated move a little less than 15%. And wow, the stock swung quite a bit through that earnings cycle. So we expect more from Affirm Holdings again this earnings cycle. And again, the expected move for Thursday, February 6th, after market close for Affirm is greater than 13%. All right. Now, I did want to include Roblox because this was a kind of a popular stock some time ago, and it is also a big potential mover, a good candidate for a breakout stock. They will announce earnings on February 6th. That's Thursday before market open. The estimated move here is greater than 17%. So a big possible mover for Roblox. All right. And then another stock that I like to follow, all right, is Berna. Not necessarily as popular, but this is also a good potential mover. They will announce Friday morning, February 7th. Okay. The morning of February 7th on Friday. Estimated move here is greater than 16%. All right. This is a inexpensive stock, about $26. So a straddle or strangle should be reasonably affordable compared to say AMD where you're or Disney where you're over $100 and your straddles and strangles are probably going to be $1,200-$1,300. Here, your straddle or strangle hopefully is around $200 to $300, and that's about it. And then the stock has an estimated move of about 16%. All right. Now that's where I want to pause for a moment and remind you of the chapter feature on these videos, and we talk about a lot of stocks, so you can go and hear about the stock itself. All right, and whichever one you're interested in. I do want to highlight a couple of stocks that did not make our list, and this is because they have what I call kind of yawner expectations for moving. Okay, but these are big names and big stocks that everybody is familiar with. Let's go back to the charts here real quick, and let's begin with PayPal. All right, PayPal will announce tomorrow, Tuesday, February 4th, before market open, and it has an expected move of 9%. Okay, that's right on that edge. Is it going to break out? Is it just going to consolidate? So often when we see percentage numbers like this, they sometimes will consolidate less than 9% or more than or move more than 9%. So anything in that 5 to 9% range, always questionable like that. Now, Google or Alphabet will have earnings on Tuesday, February 4th, after market close. Estimated move here is 7%. Again, one of those that's just a big company, not expected to move stuff. Oftentimes, the option pricing is right in line, so it's hard to find an edge. Okay, sometimes we can for PayPal, sometimes we can find that for Alphabet. Always important to look, but again, kind of a yawner. Okay, 7%, not really on the list. And as I check pricing, it's right in line right now. Same thing for Amazon. Amazon pricing right now is right in line. They will have earnings on Thursday, February 6th, after market close. Estimated move here is around 8%. So again, single digit moves, not real quiet, not real volatile, just kind of about average. But again, Amazon is one of those it's a powerful stock. And you can see it's up 33 basis points today on a day that the market is down. And again, with AWS and all the things, Amazon's always fun to watch, even though the expected move right now is about 8%. Okay, just a couple of more here. We have Merck coming in. Merck will have earnings on Tuesday, February 4th, before market open. Estimated move here is about 5%. And you can see this stock doesn't really gap. It can move, but again, through earnings, it's supposed to be right around 5%. Pretty quiet stock. And last is Pinterest that I'll go over. This list is obviously not all inclusive, but these are some of the most notable names. So Pinterest will declare on Thursday, February 6th, after market close. Estimated move here, and I wanted to leave you with this one, greater than 17%. It's definitely one to watch. It's a $30 stock. If you can find the value there, let's see what it did last time. Pinterest had an expected move greater than 15%, and the stock moved 14. Okay, so it closed down 14. It moved greater than that. So 14% last time. when it had an estimated move of 15%. Now that estimated move is a little higher. It's around 17%. So if I can find something in that 10, 11% range, that is what I am looking for on Pinterest. Okay, there are these and a lot more stocks that have earnings this week, but these are some of the most notable. As I show you the summary here of those, you can see that, for example, we have Hershey. I didn't, really talk about Hershey. Elf Beauty Supply over there on the left-hand side of the sheet. That's usually a big mover. Okay, so even though we don't really touch on a lot of these, this sheet is really worth its weight in gold. It's worth a lot of research and consolidating, and we talk about it on the show each and every week. So in summary of this sheet, on the left-hand side, these are the stocks that we often feature in our Delta Neutral Breakout portfolio. This is a subscriber-based publication that I generate each and every week around earnings. And on the right-hand side, this would be Delta Neutral Income. Okay, these are quieter stocks where I mentioned that we do sell iron condors, butterflies around quiet stocks. Okay, but this is the list that I really focus on as we go in each and every week through earnings, and I generate this for our customers and talk about it here on the show. All right, so each and every week. So please like and subscribe. Come back to us each and every week. And without delay, I'll get to last week's trade. Let's take a look at it. Last week, we had a consistent mover on Deckers Outdoor. Deckers is a stock that we like to trade, and it was getting some good pricing. We did a strangle. You can see the risk graph on the right. The flat bottom on the black line indicates that it's a strangle. A pointy bottom would be a straddle. Okay, so this has the flat bottom. So this is a strangle, and we are looking for the stock to break up or break down. And what happened as we entered this? We talked about that stock last week, and then late in the week, the stock had earnings. And look at this. The stock closed down over 20% on the day, and that generated a hefty 80% profit in just 4 days of over $1,300. Okay, that's per straddle. Okay, per strangle. So for every strangle you did, that was a profit of $1,345. And believe it or not, today, okay, so that's an image from Friday when we closed out the trade. I send this alert out to our subscribers. We took it off on Friday. Stock is down. We have very nice profits. Today, there's follow through to the downside. If you pull up the chart today, you'll see the stock is trading lower. This trade actually doubled. If you held on to the trade through today, you follow us and you're like, hey, what do I do with it today? Well, congratulations, you have a double. That would be kind of a home run trade anytime we get 100% return in a week. Doubled your money in a week. That's the power of these breakout trades. So what do I have for you this week? Well, let's take a look. It will be Rambus. All right. So RMBS is the symbol here. We are looking at a strangle. The debit here is about $500, so it's very affordable, even for smaller accounts, $10,000 and up. Okay, $10,000 portfolio and up is kind of the minimum where would be appropriate for this type of strategy, because the debit, as I mentioned, is about $530, right around there. We are looking for that volatility. We're looking for this to break up or break down. Now, Rambus wasn't necessarily had the biggest potential move of the week. You saw several stocks that had, 17% or more on my list. Why Rambus? Well, the key here is that Rambus doesn't have weekly options. They have standard options that expire on the third Friday of every week. All right. So these are February 21st options. That means these are 18 days till expiration. So not only do we get the move, but if it doesn't move enough, we can stay with the trade for up to 3 weeks and see if this thing moves into our profit zone if we don't get that big gap. So giving us time to be right is one of the critical factors around this. You want to have enough time to be right without paying too much. It's a delicate balance. But that's what we talk about in each and every one of our trades that we provide for you. is that delicate balance. So that is it for this week. A lot of companies declaring over 590 stocks. I have a free gift for you for hanging out. Download it now at ewotrader.com/straddle. And I will see you each and every Monday right here on Earnings Call. Everyone have a great trading week. I'll talk to you again next week. Take care.